The superannuation lobby is arguing that Melbourne house prices could jump another $70,000 if home buyers are allowed to dip into their super to afford a deposit. The Super Members Council says the coalition's proposed super home buyer scheme, which would allow home buyers to take as much as $50,000 from their super fund savings to buy their first home, would increase demand, raise prices and exacerbate the housing crisis even further. For analysis, let's bring in Dr. Cameron Murray, Chief Economist at Fresh Economic Thinking and a property market expert. Cameron, why can't we use our own money to get into the property market sooner? This seems to be counterintuitive on so many levels.
Yeah, it's a bit of a puzzle, Rita, because people can use their super to buy homes for other people. It's very, very common for self-managed funds to buy investment property, and it's very common for super funds to invest in build-to-rent projects. And so you can actually rent a home from your super fund as long as it's in a build-to-rent project, which is a bizarre situation when we know that owning your own home is actually the best asset to have in retirement. So I do find it a little bit of a strange situation.
Oh, absolutely. And the sooner you get into the market, typically the better, because prices seem to, in parts of Australia, double every 10 years. This self-serving analysis we're getting from the Super Members Council saying prices are going to soar by 70% if home buyers could access their own super. Do you accept that conclusion? I mean, you can understand that it would add further demand to the market, which could increase prices?
Yeah, what I said online when that came out was it just doesn't pass the sniff test. We know, for example, that a first home buyer's grant, which is a cash gift to first home buyers, can increase prices by the amount of that grant, because that's free money if you buy a home. But using your super isn't free money for buying a home. It comes at a cost of earning the return, sitting in your super account and delaying your purchase till next year. So you don't have to rush in and buy your home because you're allowed to use super. You can actually keep it in super, earn a return on that and buy next year. So in terms of that effect of people rushing out the gate to use super, it's going to be much, much lower than other types of subsidy like first home buyers grants. And if the policy sticks for the long term, then of course there's no rush. I can always wait, accumulate in my super and buy a bigger house in 3 or 4 years' time. So any price effect has to be a lot less than the $50,000 and relatively temporary for many other reasons. So yes, it's going to accelerate demand. That's good because we're going to get more first home buyers into the market, but it's not going to have large or long-term price effects, just small temporary ones in certain areas.
You make a good point. How can prices jump $70,000, $80,000 when the maximum you can take out of your super is $50,000, even if it was free money, which, as you explained, it's not. Now, let's talk about the state of the building industry. Another builder, Rourke Group, has collapsed last week. We've got building approvals hitting a 12-year low across the country. Construction companies, big and small, collapsed in significant numbers last year, and yet there has never been a more urgent demand for houses to be built. We've got mass numbers coming in, rents going up, soaring taxes for property investors. All those factors building up to a perfect storm? How are we going to navigate this real estate crisis?
Yeah, well, I think we need to keep some perspective in mind. There are still near record number of dwellings under construction right now because during COVID we had a lot of stimulus for new housing and we haven't quite worked through all of that. And so there's a lot of half-built homes and projects that have been massively delayed. And these bankruptcies of construction companies are part of that delay, but they will be worked through over time. It's just a little bit of an unusual period where we have essentially opened the floodgates to migration at a time when the building industry is having this massive post-COVID adjustment and struggling to get the current batch of homes completed. So I don't think it will persist for too long. I think if we look ahead a couple of years, we'll see migration falling and building approvals bouncing off these lows again.
Dr. Cameron Murray, I hope you're right there. Thank you so much for your time this evening.